current forecast, we think dollar yen is probably in the 145, 148 range. Lots of things are going to happen between now and the end of the year. But I think the other thing is, when you talk about year-end December, we got to remember markets will start to factor in the outcome of the U.S. election. So it's going to be huge volatility heading into the end of the year. So I think at this stage, it's going to be anyone's guess.
As of now, when you look at those comments from Ueda-san, does it feel like he is being relatively non-committal, and does it feel like the BOJ are poised to do nothing at their next meeting in September and wait for this volatility to settle down?
Look, our view is that the BOJ will continue to normalize slowly. We're still looking for another rate hike from them towards the end of the year. They will want to do that only if the overall global financial market is stable. And obviously, the carnage that they partly caused in early August, if that was to happen again, then they're just going to postpone it. But I think ultimately you have to look at their BOJ policy. Their policy rate is 0.25%. Inflation just came up today, 2.8%. So, is it justifiable to have a policy rate at 0.25% when they've defeated 4 decades of deflation? And really, in other words, they're behind the curve. They really need to start to get moving. When you're behind the curve and you move like that, obviously it's going to cause market ruckus. But I think you shouldn't shy away, because if you keep backing off every time you cause some volatility, you're just going to end up further behind the curve. You'll just encourage people to build up, more imbalances in the system, which is partly what caused the flash crash in early August.
Shouldn't shy away, but here's the thing. You've got Ueda saying concerns about a slowdown in the U.S. economy were behind and caused the recent market rout. So he's saying, look, it's not us. It wasn't me hiking rates, right? It was the miss on the July payrolls report, among other things, right? He needs to be very, very careful about how he does this. We've got expectations are right now the next time they're going to move is probably Jan of next year. Is that what you're expecting? And if so, by what quantum?
Look, in terms of BOJ, we're looking at another 25 basis point hike end of the year. And then eventually taking the BOJ policy rate to 1% by the end of next year. Now, for the Fed, obviously this is where Fed also starting to engage in rate cuts will help. One of the things, of course, is that with the early August rout, yes, I do agree that the weak U.S. data also partly contributed to the sharp sell-off in global markets. But I think we probably won't have that occur anymore, because it's quite clear now that the U.S. economy is still tracking towards a soft landing in our view. The recent data points to a slowdown, but nothing too material to indicate they are heading into a hard landing.
Powell's tone at Jackson Hole, is that going to be overall neutral or negative dollar event?
That's going to be interesting, because given where the market is and given the sell-off we've seen in the dollar, and the market is pricing in 100 basis points of rate cuts by the end of the year when we only have 3 Fed meetings, that's implying the market thinks there's a possibility of 50 basis point move at the September meeting. I think that's a bit aggressive. Again, that's based on my view that the U.S. is on track for a soft landing, so it's more of a moderate 25 basis points moves from here. So if Powell comes out and sort of affirms that, yes, they're going, but not in any rush to cut big, that will be seen as less dovish, obviously. And given market pricing, there should be some adjustment. We should see a rebound in the dollar.
Rebound in the dollar, but you're looking at dollar yen end of the year 145, 148, around there. Wouldn't you agree, though, that you just got through saying that you think the BOJ is behind the curve in terms of normalizing, in terms of raising rates? We've been saying for at least a couple of days now, right, that the Fed is behind the curve, right, in terms of cutting rates. When you put those two things together, it seems to suggest to me that the risk for yen is very much to the upside. So I'm kind of surprised you've got a 145, 148 target by the end of the year and not something considerably stronger.
Look, that's always a possibility, but that can only happen, say, for example, dollar yen heading towards 140 or something like that. That, I think, will require the Fed to be a lot more aggressive in cutting rates, even more so than what's already currently priced in.